Hello everyone and welcome to Forex Trading Unlocked YouTube channel. Today we have our episode of the GBPUSD rally starting off the 2026 year. And before we get into everything, let's see, we gotta give you this little quick look over here. And let's see, not that one, let's find you our little disclaimer here. There we go, timer. All right, so we're going to share this screen here. As you can see, we have the Forex-Trading-Unlocked.com website pulled up. We're going to go down to our disclaimer information. Just want to remind you real quick that this video is for educational purposes only. All right, with that being said, now let's go to our market here. We have the British pound US dollar pulled up, and let's see, I think we got the wrong. Here we go. All right, that's okay now. All right, now we got the right screen for you. All right, sorry, we just had some new technical hookups. As you can see, we got some bugs going on. Just got live back about 5 minutes ago, actually. All right, it's starting to look okay. At least we got video and audio. A little choppy, not our normal video presentations, as you see from our other recorded stuff. Anyhow, here we got the British pound US dollar that started off the week nicely with a new higher move high, barely taking out the high from last week, but still it's inching higher. If you look at it right now, you can see it's almost like a little step pattern moving higher and higher, maintaining this slope right here, which is a pretty even slope for a trend. It's not too extreme. Overall, you can see this market's been in a sideways pattern for a long time. One of the key things you need to look at is interest rates. So let's take a look at the 30-year Treasury bonds, see what they did today. As you can see, the interest rates, they're higher in price today, meaning lower in yield, but not by very much. Still kind of leaning on the bottom area of where they have been as far as yields are concerned. However, what we got here is almost like a really tight head and shoulders pattern. So I think you got to key off of Friday's low in the US dollar, in the 30-year Treasury bond, as well as the low that was set back on Friday the 12th. Back in December of 25. Can you believe that? We're talking about 2026 now. So anyhow, this little rally that's went on today, if we get a follow through and we take out the swing high, especially from last week, which would be last Tuesday, last Wednesday on the 31st, last day of the year. The high of that day was 116.08 in the 30-year front month contract. So that would be the March contract for any of you that are not that familiar with the futures. But that is something you definitely want to pay attention to as yields start to move. I think right now with the next Fed meeting, there is a good chance that Powell will probably cut a quarter point. So anyhow, we have a nice breakout to the upside. Right now, we're pretty flat in the aftermarket hours. We still have a couple hours before Asia reopens for the day. But right now, this upside target level number one is a good area right here at 137.22. So we still have not quite two full handles to go. We're trading at 135.46. So about 178 actually of price movement to hit our upside target level one. Now this area here is where we're looking for the market to spike up into going into this next Fed meeting, which will be in the next few weeks. Powell, from his speak, if you will, from the last meeting, and even going up until last meeting, it seems that there is a potential for him to still cut one more time before he steps down and the new Fed chairman is sworn in. And then I believe the first meeting for the new Fed chairman will be in May. So we still have a little bit of time before that, but it is likely that we will get a rate cut. Should we get a rate cut, that is positive for the pound US dollar. As you can see right now, we have this in a buy mode anyhow. This critical support zone down here, 131.98 down to 130.62. So you can really look at it as basically 130 half to 132 even in the pound. That's the lower part of this range that it's been trading in for basically almost the past year. So right now, could we just be buffering the upper area of the trading range? Absolutely. With yields being lower in expectation over the next 6 to 12 months, there is a good chance that right now, the pundits have pulled back. They're looking at now basically a half a point over the next 12 months, where Powell could be 1/4 of that, 1/4 point, meaning half of that move if that's all that they do. My prediction is they're going to do 1.25 to upwards of maybe 1.5% between now and the beginning of next year. So I really believe that the new Fed chairman will, at the very least, cut half a point over his first fiscal year, or finishing out the fiscal year for 2026. But before he finishes his first year as Fed chairman, I could see us having every bit of a 1.25 to 1.5% interest rate cut over the next year, 12 to 14 months. That's a nice little slide if you think about it in yields, which would mean higher prices for the 30-year, the 10-year. Now, fundamentally, that's good for the pound. The pound typically overtrades for a lot of markets, and it's very likely that the Bank of England, now, I wouldn't say in their next meeting or two, but they are leaning towards raising rates. So if you look at the divergence there of interest rate fundamental, that is very bearish to dollar. I mean, where we're cutting rates, they're potentially raising rates. So for this currency cross especially, I would eyeball this upside target level 2, which is right here at 140.79. That probably, it's basically 141 even. Now that is a stretch from where we're at right now. That's another 6 handles away. If we get another rate cut, especially with the expectations of the new Fed chairman, or even Powell, possibly, let's say Powell cuts at the next rate, the next Fed meeting, and then also there's an expectation not just of him cutting again, but of him really speaking as if he will at least cut one more time before there's a transition of power in the Fed. If that happens, the 141 even area is a very viable target area, just on a fundamental interest rate basis. As far as the economy is going, unless there is something that would majorly upset the UK economy, it's already in shambles, so it really can't get beaten up very much more than it already has. And like I said, these fundamentals, I think, at least for the next quarter to 3 to 6 months, maybe by midsummer, this might not be in play anymore. There's a lot that can happen yet. And we still don't have a new Fed chairman that's been sworn in either. So we don't want to get ahead of ourselves there. Anyhow, that's our target area to the downside. If we take out this swing low here, which was from last week, that was on Wednesday, the last day of the year, that low was 134.01. If we fall below this 134.01, well, that means we make a higher move high with a lower move low. Does that make it bearish? No, we could be good. This market's in an overall long-term sideways pattern. Short-term, it's been in a nice uptrend. It's not really a corrective move. It's actually an inverse reflection of what happened here. You look at, basically, we traded back here in September 25th. 4 months later, here we are. We came down, made this nice little U pattern, and boom. And we have almost like a head and shoulders pattern here coming into this one. So we'll see how this ends up. Right now, fundamentally, I think it's a buy break posture that you want to maintain for this. And I would say that if we do come back and take out this last swing low here, probably a good buying area would be closer to this old swing low here. Now, granted, we did fall through this upward trend line, but then we did have the holidays of a lot of sideways action. I think that right now this little area here is very solid support. If we didn't have holiday markets, we probably actually would be a little bit higher than we are. So we're adjusting. We're coming into the first full week of the year. It's Monday. Let's take a look at some other real quick fundamental here. So the euro US dollar did not have a big move today. It's coming off of its lows. It had a spike low today, but if you look at what happened here, it basically was unchanged. It opened at 117.20. It closed at 117.21. It's basically the spread between the bid and the offer of the just getting in and out of the market there. And then we made a lower move low. This is kind of a solid short-term intraday move that I would pay attention to. If you're playing the long side going into tomorrow, especially the early part of the European session, buying it against that low. So let's see, that low right there is 1.7. Is 1. 116.59 today. Yes, 116.59. So if you're long against that, like right now we're trading at 117.21, 70 pips. Okay, so let's see. If we go up to 118.14, 118.14 is a target right now. Okay, so 70 versus 100. It's not quite exactly what you're looking for as far as risk reward. I would say that that's a good intraday play to get into, especially if the market trades a little bit lower. I think the low from today is solid, or Monday actually. Now we're going into Tuesday's trade. This upside breakout level at 118.06, I believe, will be challenged sometime between tomorrow and Wednesday. We get above this here, that would be a good indication that we're going to hit this upside target level here of around 119.94. If the pound continues to go higher, especially if they break out and start really looking like they're going to hit that huge upside target level number one in that chart that we just looked at, very good odds that this is going to happen also in the euro US dollar. So let's see, do we have any questions, comments, criticisms in the chat? No, we don't. All right, well, this is just an impromptu aftermarket little test. We're checking out the technology, making sure that it is syncing. So sorry for the quality, but this is not exactly what we're normally working on. But we did show you the Forex-Trading-Unlocked.com website. If you go here and you go to our products, we have the Tiger Forex report here, which gives our weekly newsletter. You can subscribe for that. The first month, there's a 30-day money-back guarantee on that one. Also, we have our page here of high probable Japanese candlestick patterns, where there's a video on it. Sorry for these ads popping up, as well as a little short synopsis of parts of the book. I am the author of the book. So if you want to learn a trading system that works really well for all markets in the hourly time frame on up, and once again, I said it does work in all markets. It does work in crypto. It's great for options traders, especially like if you're trying to figure out, I use them a lot for credit spreads. When you get a good reversal signal off of a nice trend with a high probable Japanese candlestick pattern, I'm telling you, that's a great time to put on some credit spreads to try and catch a correction, which is a very low risk play for an option trade, especially. So those are very nice, and they happen all the time, especially in equities because there's so many of them. So I would definitely check that out. Without a doubt. Once again, you can get access to that from our menu here on Forex-Trading-Unlocked.com. We looked at the euro to reinforce the pound, and let's just take a look at the British pound US dollar real quick one more time. So once again, that level to shoot for, we're trading right now at 135.45, 137.22 is where we're looking at. So about a point and a half, a handle and a half. So 150-point move over the next few days, very possible. Another thing you can do is go to on our website, you go to the tools, you go to the forextradingunlocked.com website, and once again, you go to our workstation page from the tools. You can access our economic calendar. So January 7th, there's S&P Global Construction for the British pound. Doesn't really mean anything. Mediocre number. January 8th, yeah, there's no real numbers for the pound that you have to really worry about. It's more the dollar that might cause an issue. So yes, I would watch the dollar index. The dollar index is under pressure. Stay in that buy break posture for the British pound US dollar. Okay, that's great. Thank you very much for checking in with us, and make sure you, if you haven't liked already, like this video and share it with your friends. Subscribe to our channel and leave a comment and question any markets you want covered and stuff. We definitely would like to see what you have out there that you're interested in, and we will check your comments and answer your questions and things like that, and maybe post a video on something you want us to cover as far as content is concerned. All right, you take care. Have a good day. Thank you very much.